Welcome to the On the Tape podcast. I'm your host, Danny Moses. Today's going to be a fun one. I have my former partners, Porter Collins and Vincent Daniel on. We're joined by a special guest. You might know him from the Declaration of Independence, but we know him as the chart master, Carter Braxton Worth, founder of Worth Charting. Carter, welcome to On the Tape.
Thanks, guys. Great to see you.
So for those playing at home, I would say watching this episode on YouTube will be much easier as we're going to have charts up. However, we will describe not only the stock and the thesis behind it, but what the chart is telling us. But let me just give you a little history here. Carter used to come into our offices once a quarter, and it'd be after market close, so we would have some bourbon. So all of us have some bourbon here. And so we have a tradition of doing bourbon and charts. I'm going to preview this like a game show. So Carter has no knowledge of the side of the trade, buy or sell, that we are on. He only has the tickers. So I just want to make that known. We'll walk through some themes, some various sectors and single names, and see where we match up with the chart master. Before we begin, Carter, how does one become a stock market technician? And what are your methods? And like Spinal Tap, why the 150-day moving average versus the 200-day?
Sure. Well, look, anyone could look at a chart, and then that's the beauty of it. It's very approachable. Anyone can, just as anyone can look at a Q or a K, and anyone can stick their finger up in the air and decide it should be 3 times cash flow, 9 times cash flow, 15 times cash flow. Same thing with a chart. One can decide it's overbought or oversold. One can decide it's bottoming or topping. Very subjective, and the great things in life are. But for me, I started as a fundamental analyst, and I moved away from that. And in about 2.5 years, I just decided I don't think I had any advantage. And then I started to realize that no one had any advantage in that score, and that there was no relationship between price and earnings on a 3-6 month basis. Over 10 years, yeah, you make a lot of money, your shares will go up. You lose a lot of money, your shares will go down. But this quarter, next quarter, stocks go from 30 to 90 to 30, and nothing changed. And so I decided I'd study price instead of companies. And that's all that charting is. It's a pictorial representation of price and the study of supply and demand.
All right. So with that, let's get rolling here and kick it off to you guys, maybe Porter and Vinny. Our thoughts generally on the markets here before we bring up, our first chart and what you guys are thinking here.
We're just eagerly anticipating Liberation Day, which I believe is tomorrow.
But seriously, it's funny when you think about tomorrow's Liberation Day. But let's talk about it in terms of markets. He's the only thing that really matters from a top-down perspective in markets. And what he says tomorrow will move, at least in the near term, probably more for the medium term and long term, the needle. So I feel like the market is mostly on pins and needles and in waiting as to exactly what the blueprint is going to be. Is it going to be worse than expectations, better than expectations? Who the hell knows? We don't.
Yeah, guys like us hate markets like this because you could have some special gem that can go up, but everything gets caught in the jet wash of whatever Trump says, yay or nay, right? And so these are like when they get more macro or more micro, this is a more macro tape, and it's just it's brutal.
Therein lies the opportunity, and I'll say before Carter brings up the chart of the S&P 500, is that it's my belief that we have now damaged kind of the multiple of what people are going to be willing to pay for the U.S. markets based upon this stop and go strategy and this inconsistent policies. And so historically, you could depend on the U.S. market, securities laws, consistency, and now we've kind of lost that. So I feel like on a multiple basis in the markets, it's very fair to think that from 22 times, you should be 17 or 18 times. And that's without knowing the impact that it might have on earnings. So Charter,
Danny,
with
he doesn't care. He doesn't care, Danny. He just looks at price.
Care.
He doesn't care.
Carter, with that.
That's the beauty. That was a nice soliloquy and all, but
let's see it, Carter.
So now, yeah, sure. Oh, there's the chart. All right. So I've used the SPY here, but we could do the SPX. Let's just do the real thing itself, even though the correlation is 100%. So the issue from my seat is that the smoothing mechanism, the 150-day moving average, and some people like shorter-term moving average like 50, some people prefer 200, and all the work that I've done, the 150 has the highest hit rate in terms of measuring trend and changes in trend, but it is now flat, which is to say prices 150 days ago are exactly where they are now. And a flattening moving average, all that a moving average is an automated trend line. So that's a 1 year, that's a 2, that's a 3, that's a 5. Basically speaking, without being too simplistic, good things live in uptrends and they live above a rising moving average, and bad things live in downtrends and live below declining moving average. So buy, sell, hold. I'm a seller. It has all the elements of a rollover, of a top. And while unknown how much lower it might very well be headed, our hunch is down towards 5,000.
If you talk about the 21 to 22 transition, there was a throwback back to the 150. Like, my only concern about pressing shorts right here, right now is, is Liberation Day, something happens and we get the face, because now we know people are all hedged up, right? People, they're not, fully long like they were, a couple of weeks ago. You can easily see a throwback, but from there, I think the throwback's a sell. I mean,
Well, that's right. So then, Porter, you bring up a key thing. Well, obviously, here and now, can the Qs rally back to the kill zone as well? Right? Can they do that? Right? Could the XLK, so to speak, can it? We've had a fairly substantial drawdown, pressing a short, only to have it rally in your face and hit its head. That's deadly. What you're speaking of course, is something like if you look at like a Goldman, where they break and they rally and then they start to churn right at the 150 day. But the elemental thing is that so many big stocks, bullish to bearish reversal in Microsoft, right? Bullish to bearish reversal in Nvidia, bullish to bearish reversal in Google. So many important assets have all rolled. Now the question is, what's one's time frame? If one's very tactical, the worry is that, yes, you could get bigger here on the short side only to have it throw back on you and get close to 100. But if one is looking at the structural circumstance at hand, I think the important judgment is that this is a top and that something is nascent in terms of what can come.
So for those of you who can't see, every chart's been a sell thus far, but I want to make one comment on the overall market here, and I'd love to get Vinny's thoughts on this in general. So we know that there's 6 or 7 very large institutions which have levered portfolios. They run these beta neutral shops, effectively try to mitigate risk. And when volatility moves higher, and I would love to see the VIX in a second here, Carter, basically these firms are forced to bring their books down. So 6 or 7 or 8 times leverage down to 5 or 6 or something like that. So it's hard to see with elevated volatility that resuming itself to re-lever, so you need a VIX to come down. So Vinny, before we look at the VIX, I know you monitor that stuff. Give me your thoughts on that.
Well, in many respects, over the last 3 weeks, and I was looking down at my screen because I need Danny's voice. Carter basically just said here and now, and I don't know why, but I went exactly to Luther Vandross. And here and now, I promise to short the S&P. But I can't do the voice. I'll let Danny do it. But I will say over the last 3 weeks, from what we've heard, and this is a lot of anecdotal information, right? And you get from your friends who are institutional hedge fund guys. The vol targeting regime has delevered itself to a certain extent, to the extent that they need to do more, we'll see. But they have had to be ahead of the game because when volatility goes up, they have no choice but to degross. A good portion of that has already happened. Now we're waiting for the event. And the issue with that, Danny, is we can probably go either way now. And the fundamentals would suggest to us strongly, and Carter would laugh at us when we say this.
That's why he calls them fundamentals. Yeah.
Would suggest to us strongly that we should stay on the sidelines, if not short the market. But as Porter suggested, our conversations and our contrarian senses are suggesting everybody is hedged up. So this is a very difficult time to make a top-down call, at least from our opinion, what to do. But I think right now, the majority of the hedge fund complex is probably more hedged up than they have been in a while.
Just to look at this is worth this. I mean, here is the whole shooting match. If the Russell 3000 represents 98% of the investable capital in the United States, and it does, the index down only, 9, 10%. But this is how much has happened already. You're talking about, sort of 28 to 32%, whether you take the median or mean. Stock is already well in a bear market. And so the risk of being even more aggressively short is that this kind of snaps back, throws back on you. And also it's not just magnitude in terms of, but it's duration. It's worth pointing out the market's peak, both the S&P and the Russell 3000 was just 5 weeks ago on February 19th. But actually the mean and median stock peaked 5 months ago. So it's not as though this is new just because of chat BBT or deep fake or deep stake or deep snake or whatever the heck it was, or is it new because of tariffs or schmariffs? It's been going on for 5 months. And this is depicted here. The real question is this. Right now, just to talk about the market, I mean, you're talking about basically half of all stocks are down 30%. And here's I think the picture. The correlation, just to be clear, between the two indices is 99.9%. That is the S&P 500 and the Russell 3000. It's just the Russell 3000 includes the S&P 500, but it's the next 2,500 stocks. Here, for instance, is a 20-year chart. And I thinking that just as a minimum, check out that trend line that connects the COVID low with the 2022 bear market low. And were we simply to draw down to that level, that implies another 15% plus or minus, independent of whether we throw back here 3-5% because of Liberation Day or whatever you want to call it. But anyway, I think that's a good roadmap, my hunch.
In the near term, like you can't find a bull out there, right? Everyone's nervous. Everyone, the uncertainty is very high right now, and so if you do get the throwback, I think we're waiting. But I think the general sense is that we're in some sort of a bear market right now.
So Carter, before we get to some other indices and other single names, I think Nvidia, which you glanced over, I think it's important to identify the exact levels where you think it could potentially go to, as if the chart's saying it. It is probably the most behavioral finance name that's out there. And the thing I love about charts is, to me, whether it's the cart or the horse, it depicts behavior. And it can be self-fulfilling, but it also is an EKG, to my feeling, on the markets to a degree and on single names. So what are you seeing on the Nvidia chart, and what is it telling us where level may be to actually start nibbling on the long side?
Yeah, absolutely. One thing before looking at Nvidia, which will put Nvidia in context, if we were to look at the SOX itself and juxtapose that against the eSOX, so now we're
talking about the semiconductor and the European semiconductor?
No, this would be the semiconductor index versus the equal weight. So it eliminates Nvidia's huge undue influence, right? So you're looking at two lines. One is the actual Philadelphia Stock Exchange Semiconductor Index with Avago and Micron and Intel and Microchip and so forth. And the other is all of those same stocks, but equal weight. And so what's happened, of course, is that the average semi has been in trouble for almost a year, whereas only recently has Nvidia started to succumb. And so you see that juxtaposition here. But let's go to Nvidia itself, which was, of course, the one that was doing so well, along with ASML and Avago. But now, again, the 150-day moving average is flat. Now, and that is usually a bad circumstance. So tactically, one could say, press the short and watch it throw back to 120 and hurt us. Okay, that is the risk with short term. But structurally, this has all the elements of an important top.
Okay, so where can it go? Is there a level of support that you see in that name?
Yeah, I mean, I would think you can retrace sort of to the point at which it really broke out here. So that would be back in 2 years ago, in 1 year ago, excuse me, 2024 in the spring. I think you can go to sort of 98 to 100. And we're not that far from there. That's 10, 12% from here.
All right. So a name that's obviously controversial that's within the Mag 7 here is Tesla. It's a tough name, obviously, to trade since it doesn't trade on fundamentals. I know Porter's going to opine here. Thoughts there before we give you what you think might be our position. Who knows? Maybe Porter Vinny long Tesla, Carter. But what does the chart tell you?
Well, it's truly what a pair of twos is, right? So first of all, it speaks to the vagaries of valuation, of charts, of anything. How can we explain this intellectually? 200, 500?
Oh, I can explain
200.
it.
200, because it was a Trump car, now it's not a Trump car, or it was a better electric car, but boy, it is better now, or the Chinese are worse now. It was cheap then, expensive now. The truth is, it's just a gambling chip. Here and now, pair of twos from my seat, which is today not particularly great as a short, not particularly great as a long. Sometimes stocks are where they belong, where they should be, if you could use that word. I think this belongs right about here, 270 a share.
All right. Well, I'll tell you that moving on, unless these boys have a comment.
Well, hard to argue that it's been, like, if you take it on a 5-year basis, on a relative basis, it's been a total dog, right?
Yeah, I mean, here's a 5-year chart. So if you were simply to screen for stocks in Russell 3000 that made no results in 4.5 years, you'd have a pretty sad set of losers. You'd have things like CVS, or not CVS, things like this. Yeah, Chevron looks great, right? I mean, yeah. So Tesla has, after it's boom bust, and it's done nothing for anybody for almost 5 years.
So pair of twos hanging from the rearview mirror there. All right. So a couple months ago, Porter and Vinny made a really bold call. It was totally against the grain, and that was long China when everyone hated it. That was at the peak of the S&P 500 and the probably low. So I don't know if you want to look at the FXI, but I know the two names that they have been trading, and I don't know, not sure actually if they're still long them, were Alibaba and JD.com, among many others. But give me your thought on the FXI first, and let these guys give you their current positions and themes on that.
Bearish to bullish reversal. You'll see that here on the 5-year, very clear. I mean, a beautiful, I'll get rid of the volume just so you can see it, a beautiful double bottom. If you were to draw a trend
Did you just
line,
say beautiful?
What?
Did you just say beautiful?
Beautiful.
In the old days, I just want to be clear. If we were sitting in the room with Steve with us and you said something like that, Carter, Steve would turn to me and goes, Danny, add 1% to Alibaba and JD.com tomorrow first thing. Did you do it? Did you do it? No, Steve, the markets are closed. All right, just make sure that you do it. Anyway, please keep going, Carter.
Well, and it is a beauty. Look at that. If bearish to bullish reversals exist, look at the double bottom. And if you could draw a trend line with your eye, down, 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 breaking above that downtrend with a heavy volume up thrust, check back to the 150-day, now back to the former high. Now, the backing and filling is normal. You get to a form back and fill, and then before exceeding it, you contend with it, and then I would say on for more. So for my seat, we can do KWE. What's this other thing? KWEB. This is KWEB. All the elements, meaning it's very asymmetrical.
Free to move higher.
Free that too. But if we're wrong, right? If we're all of us who might like this or don't, it's the worst case to my eyes. We waste time. It's 40. It's 32. It's 35. It's 31. It's 41. But if we're right, is it 50? Is it 60? Is it 70? Meaning that's a lot of asymmetry to that bet. I think that's the kind of bet you want to make.
That was music to our ears, Carter. We've been slowly adding to this over the last, say, week as these stocks have come in back to the smoothing
mechanism. Oh, that's that's a patented Carter smoothing mechanism.
It is a patented Carter.
Yeah. So Carter, Alibaba on there, I know they're going to all look similar. Alibaba's had a much bigger move on a relative basis.
And the difference, right? Baba exceeds so you have a spike here at Tepper, one of the greats of all time, makes the case, and rightly so, to expose oneself aggressively to China. Perchance on an intermediate basis, it's the peak because just the way things work, it was so steep a line. If you look at where FXI is now in relation to that peak versus Baba is well above it. And that's the difference, right? So Baba's the stronger than the aggregate, and Baba too has all the elements of a classic bearish to bullish reversal. Plenty of headroom, plenty of room to run. What was the other one?
You can barely almost see it on the chart where Vinny and I went on CNBC there at $80.
Yeah, that was pretty good. That was in the nice weather in Miami. That was quite a call. JD.com hasn't run as much, I don't think, Carter, but I imagine that looks even better potentially for the upside. JD.
Yeah, different shades of the same thing, right? Here too, it's more like the FXI. It has the same spike. It has the same check back to the penny. It never quite got to the high, whereas FXI exceeded it. So if we toggle back and forth, JD, FXI, all shades of the same thing. But I would be long this as well, making the bet that the lows are important lows, that the bearish to bullish reversal has so much room to run. I mean, it's 60, 58, 60. I think I'd trim, but that's some good eating from here.
All right, let's keep moving this along. I'm not going to tell you our position. Anyone that knows us already knows that. But to those listeners and viewers who don't know us, let's bring up the GLD, which should be a nice proxy here for gold, and give us your thoughts on that, please.
Yeah. So if we take away everything but the smoothing mechanism, gold is, I talk about it up and to the right, north by northeast, higher, higher, ever higher. But day to day, hour to hour, this is getting a little bit steep, a little bit far above trend. Here's a 2-year. Here's a 5-year. Here's a 10-year. Tactically, I think one wants to reduce exposure here. It is now popular. It was in the cover of the Wall Street Journal. This is something that was snickered at, ridiculed, reviled, and now everyone loves it. If it's right to like something when it's ridiculed and reviled, when it's adored, maybe time to be a little bit smaller. I think we're spending 2 seconds on this, and let me just do it if we can.
While you're doing that, I want to. That reminds me, what we used to bring up was the Price is Right game, where you had to guess the guy going in the Alps, and it would be so high, and then bang, come down. That GLD did look like the yodeler in the Alps there, but I'm going to assume, Carter. Oh, there's your gold. Go ahead, Carter.
So look, I didn't make those lines. I didn't want those to fit. I didn't kind of dream it up. Those are mathematically parallel lines, and we are now at the upper band of this 18-month channel. Gold has gone from 1,800 an ounce, which is essentially a 75% advance to 1,350. These arrows kind of draw themselves. Now, if instead you use the smoothing mechanism, how far above the 150-day are we? Well, here's a 5-year chart. Here's a 10-year chart. This period, take a look, is very analogous to the 2019-2020 run-up. That and that, that and that. How analogous? 50%, 50%. Gold can triple from here, but it's about tactically, does one sell calls? Does one trim a little bit? I think that's exactly what tactical trade is. And you're also up against this internal trend line. I would reduce exposure.
So, Carter, gold's obviously moved, but the miners, I'll let Vinny and Porter talk about a few that they have not run as much. Obvious reasons. It's easier just to trade the metal than it is to figure out how these operators are going to pull it out of the ground. But what are your thoughts on a couple of these? And Vinny and Porter, I'd love to hear your thoughts on how you're approaching the mining section
Sure,
here while he's doing this.
GDX, not as steep as GLD. And then probably it's worth doing just to look at a structural long-term thing. If I were to do XAU, that's the currency or gold bullion, versus, ready, XAU, the Philadelphia gold and silver miners, and I were to, for fun, do this on a 30-year basis, this is the issue, right? Gold miners have gone nowhere. Now, do they ultimately, as operating business with leverage, do they start to reflect the prosperity seen in the gold commodity itself? That is the hunch. AEM, for instance, the big one is a bit extended, but there are plenty that aren't. And my hunch is where it's right to trim a bit on the bullion side is to retain exposure on the equity side.
Porter, I know you've done some work on Newmont. NEM, Carter, if you could bring that up, and Porter, give us your thoughts there, because I know you've done some work on Newmont.
Yeah, NEM, I mean, just for fun, has been a real lagger. It's the only gold stock in the S&P 500. There is one, and this is it. Versus, just by contradistinction, look at AEM. So obviously, prosperity is not even. The question is there a lot of downside to Newmont? No. My hunch is to be long, mid-size, and to get bigger on strength.
The good news for Vinny and I is that AEM and AGI have been our two biggest gold miner positions, the two biggest positions in our
AGI.
fund. And they've gone crazy. So we've looked at that. That's gorgeous.
I'm just thinking that if I'm a portfolio manager at Fidelity and I have very little exposure, no exposure to the miners, as Carter mentioned, Newmont is the only name in the S&P 500. So if you're tracking yourself against it, I would think at some point there's a catch-up trade. But Porter, you've been telling me just from an operating basis, it's just not an efficient model, at least that they've had in the past. So bad acquisitions, and so owning the metal versus trying to own the individual names, the ones you have done very well. But I'm saying it's a little bit hard. Correct.
So we added to we bought Newmont and Barrick ticker GOLD.
GOLD, the best ticker of all time. Yeah.
In the past 2 months, and they're the reason that the GDX has done so poorly. So
fair enough. All right,
and just to add a little bit, because Porter and I probably discuss this, and argue every once in a while on this, is we have been trimming a little bit on AEM because of exactly what we're seeing, and adding to Newmont and gold because the disparity within the GDX, like when you get to the GDX, then you get underneath the surface. Like I said, AM and AGI have vastly outperformed Newmont and Barrick have vastly underperformed. And assuming that gold doesn't dirt now, which we don't think it will, I could ascribe to what Carter's saying in terms of there might be a check back of some sorts, but I don't think we're looking at gold 2000. I could be wrong.
No,
If it just has
and
a
here's
simple check
AM
back.
just for fun. Look at it in relation to its smoothing mechanism. There is no point at which when it was, and it's just not to say mean reversion is a good technique over time because it implies a lot of trading. But when you are extended on a multi-month and multiple year basis, if you just were to suspend whatever you knew, in fact, I've left the symbol off here. You could see it up there, but let's say you didn't know what it was, and it was just two lines, black and red. If the black gets this far below, this far below, this far below, this far below the red line, or the black gets this far above, what happens? They get back in touch with one another, some form or fashion. So does that mean sell it all short AM? No, but trim a little bit? Sure.
So I think part of what's going on out there, I'm not certain of this, but we've seen a ton of physical delivery of gold here. I think that there's some dealers caught short. When I say caught short, meaning they've accepted orders, have yet to actually have the physical on site, and whether that means there's futures trades going on just to protect themselves near term. So that does line up, Carter. Silver, if you could bring that up, SLV has had a more rational type of move, not as big and never participated as much. Give me your thoughts on silver here.
Yeah, I mean, SLV using that. Here's SIL, which is the miners. But SLV, this is not extended, right? And there is a lot of work done on the gold silver ratio, both as a pair, as a ratio chart. My hunch is to not trim this and to be full long. Whereas
full long,
I'd reduce some of my gold in order to put it in and beef up my silver.
Great call. All right, while we're in the metals, we'll go to the fake metal, Bitcoin, BTC, digital gold. What are your thoughts there here? It should be interesting.
Yeah, well, I mean, talk about a breakout, a level, and a breakout.
Wow.
And now checking back to the 150 moving average, more of a pair of twos. From my seat, I would be buying really lower, not here.
What is that? Can you be more specific?
Well,
we're sitting where, 84,000 as we speak here, roughly?
More like 75, down to the level from which it broke out. So in the event of, let's see here, if I get rid of the moving average, in the event of a full give back to the level of the breakout. So 75, I'd be willing to add a little bit or initiate.
I just want to add a data point to that, and I want to get Porter's and Vinny's thought. I know that Vinny had lined up for a brief period of time kind of a Bitcoin versus MicroStrategy trade, which was never going to be rational. It's not rational. I don't think it is. But I will say this, Carter, you can bring up MicroStrategy if you want. I don't know what it looks like on the chart. But if Bitcoin drops to 75,000, which doesn't seem like a lot as volatile as it is, the position that MicroStrategy has put itself in and the amount of Bitcoin of which they now own and have been recently purchasing, my personal feeling is, and I have no position in Bitcoin. I don't hate it. I don't love it, whatever. Just technically speaking, MicroStrategy will get eviscerated, but it could feed on itself to hurt the price of Bitcoin even more, considering what MicroStrategy's balance sheet would look like at that point.
Interesting. And is GameStop buying Bitcoin now?
Let's not go to GameStop and waste our time on that. But yes, of course they are. Ryan Cohen, why wouldn't he? But Carter, what does MicroStrategy look like? Is it the same chart as Bitcoin?
A pair of twos, and I'm not adding here. If I were long, I guess I'd hold it. It's a pair of twos. Yeah, for me.
Porter, Vinny, any comments on MicroStrategy? You guys are no longer involved, or?
No, we're really not involved. My only concern with Bitcoin is the way it acts, the way it trades. It trades very much like a 2x triple Qs, right? And the question is, do you want exposure to the Qs or not? And for Porter and myself, the answer is no. So we're not involved at all. I just don't like the way it acts relative to the way our mind is thinking right now. And
if Liberation Day ends up positive,
when people hear this, it will have been Liberation Day, will have come and gone. And like I said on a podcast earlier today, it's the Spies Like Us scene where Emmett Fitzhume is going in to negotiate the final parts of this thing. That's literally what's happening here. All right, let's keep ripping through here for the sake of time. The 10-year yield, the be-all, end-all of everything, Carter. Where's this thing going? Had a big down day today. At least the yields did. Looks like we're headed potentially to touch 4% here, but I don't want to put peas in your nose.
All right, here we go. So I happen to do a note on 10-year today. So here's a chart, 1 of 4, identical with no annotations, no lines. Here's one set of lines. That's fairly optically clear. Here's another set of lines, converging trend lines. We've broken to the downside out of the formation, put them all together. I'm in the camp of lower yields, which of course is the reciprocal by 10-year notes.
So for people that can't see the chart, where is the 10-year yield saying that it might be
I
portending
think
where it
we
might
could
be going?
touch 375.
Wow. Okay. So that makes this next section very interesting, which are some of the housing related stocks and then some of the banks and financials that are out there. So if we could bring up kind of the XHB, I think let's move into there. And there's a new name in Vinny Porter's portfolio. I won't indicate if it's long or short that's going to fall in this world here as well.
Yeah, so all the elements, and again, speaking of topping, rolling over, or nomenclature I prefer, a bullish to bearish reversal, whereas the S&P and the Russell 3000 put in their peak 6 weeks ago, February 19th. Housing peaked back in October, November. And you can see, of course, the smoothing mechanism is now downward sloping. If we pulled this back and did a 5-year chart, so this is, and Porter made this point earlier with S&P. Do you press a short here only to have this thing throw back on you to 102, 103? Do you get long because you think it's going to throw back? It never does. Play for a bounce. It's in no man's land, right? But the structural circumstance is something that has rolled over, that is well along in a bullish to bearish reversal. And I would think ultimately this is going to print, 80, 88, 89, it's 97 now.
Well, it's so counterintuitive to think that rates, you say 375, because rates are going down for the wrong reason, right? This tells you that 10-year yields are dropping for the wrong reason, that you would think historically the builders would potentially be a buy on that. But if you look at maybe a more of a consumer discretionary interest rate related name, like Home Depot, HD, I don't know if it says the same thing or if it may look a little bit better given people's equity that they have in their homes.
Yeah, it has also rolled. Obviously, it wasn't the high flyer that home builders were. I mean, for instance, let's just go back and forth. Home Depot could barely get above its 2021 high, whereas, of course, HB went well above the 2021 high and the bull market high before the 2022 bear market, whereas HD never could. HD, I would reduce exposure. The one that is really, I think, in trouble is Sherwin, and that's a related name. It's paint just for fun because it has not sold off like the home builders. Obviously, it's not a home builder, perhaps more stable a business, but it's true and still it is a bullish to bearish reversal with, I think, downside risk.
Danny, low to 2% short for Sherwin. Steve, the market's closed. Make sure you have that in the morning. I'm just giving you exactly what would happen.
Danny, we actually shorted Sherwin on Carter's call when he came out. I think it was a week ago.
That's right. About a week ago. Yep.
Yeah.
Now, my concern on these names is that if you look at the peak of the builders, the peak of the XHB is almost exactly when the 10-year hit 360 in the fall, right? And so if your guess is that yields are going lower, my contrarian sense is, contrarian nature is that like these names would all throw back, right? And that would make sense in a 2000 analogy where tech did poorly, housing did okay. So
I can totally see that.
I'm not. Listen, the housing data stinks right now. But can it rally if yields go lower? I think so.
Well, that's why I mentioned Home Depot, just maybe the home equity players, not home equity players per se, they're not direct, but they are impacted by people staying in their homes and doing work on it, potentially taking loans out. They can get equity out of their homes at a lower rate. That makes sense to me. That's why I asked. So I know there's two names that Vinny's been working on and Vinny and Porter have been working on, and I'm not saying long or short because I want you to look at the chart, but Carter, RKT, Rocky Bulls, yeah.
Yeah, well, pair of twos for me. I mean, this is all over the map, surging, plunging, and I mean, just look at yesterday. Heavy volume drop in gap today fills the gap, but no trade from my seat. No, nothing immediate. No, how would I say? No discernible immediate opportunity to be long or short.
Can I give you another ticker for a second? And this is where it's so interesting for us, where the fundamentals for us and where Carter comes into play. Can you do the ticker COOP? And I'll explain why I'm doing this in a second.
Well, that's a thing of beauty. I mean, right? What? I mean, look at that thing. 45 degrees, 45 degrees.
You just
45
fell into
degrees,
Vinny's
45
trap,
degrees.
Carter. Go ahead.
You fell into my trap. So basically, Rocket RKT, the ticker you gave, just merged.
Well, they
with
announced the merger.
They announced the merger with Mr. Cooper, and it's two companies that do almost the same exact thing, merging together, which creates more consolidation in the space where this is quote unquote at the least a category killer, if not starting to develop a moat because the market share is so strong.
And Vinny, that's an all stock deal?
It's an all stock deal. So over the last 2 days after the announcement that they're going to merge, we've been buying it, sort of like Clarice coveting and going back to home in Silence of the Lambs.
Quid pro quo, Clarice.
Way back in the day, I used to cover on the sell side mortgage banking, so it's very near and dear to me. And I always think to consolidate two names, and both of them are either number one or number three, you're creating barriers to entry and moats that are really great. So I understand why the Rocket chart doesn't look great.
Yeah, I mean, it does. I mean, obviously, if an asset has gone sideways for 4 years, when every operating business from sneakers to sushi to soda water has gone up, you have to wonder what is the problem with the people at Rocket. And obviously, the Cooper people believe that they can do better with the assets than the Rocket management can. And the Rocket management must know that about themselves. Otherwise, they wouldn't be willing to sell.
All right. And say within the financial and the mortgage sector, let's just move along to Fannie Mae. I don't know what the chart, it's obviously broken out here, FNMA. I'm curious your thoughts there.
Yeah, I'm talking about dynamic, talk about bullish price volume correlation, up thrust, pull back on light volume, up thrust again. I mean, a little ahead of itself, more of a pair of twos here in terms of having appreciated from 1 to 7 and now backing and filling, flagging. I would just say it's sort of a pair of twos. Yep. No discernible immediate opportunity. The liberation, the army liberation, what happens on that day? Tomorrow?
Yeah, whatever. Don't listen to Porter. All right, XLF and financials here. We'll get into the banks real quick.
XLF? Okay, here we go.
Yeah, and then JP Morgan, you can bring that up, and then that's interesting.
Well, so remember, this is, not remember, that's silly to say, but we know, all will know that this is, it says financials, one thinks, oh, it's JP Morgan and PNC and US Bancorp and Merrill Lynch and Goldman Sachs. But really what it is Chubb and Progressive and Allstate and AIG and others that have kept this thing going. This is probably worthwhile before we do anything. Ready? I'm going to do a ratio chart that I think will be sobering in terms of any bank analyst or anyone who likes banks.
Berkshire is the top holding in the XLF too. So to your point,
that's been godlike. So if I did BKX on the top, and I did it relative to S5 financials, that's the entire S&P financial sector, which is what XLF is modeled after. And I go back to the beginning of data in 1989, what you're going to see is something so depressing that, okay, so let's do a couple things. We are now, just to be clear, we're looking at the BKX index on the top, which has got JP Morgan, Wells Fargo, and Citi, right, and Wells Fargo, and so forth. And we're looking at its relative performance to the BKX. The BKX relative to all financials. So they're making all-time relative lows, even below the 09. Now, if I change the denominator to the S&P, just to pick this another very sobering reality, this is now banks on the top, same thing, and on the bottom is a ratio, one thing divided relative to the S&P. We are below the financial crisis. Good night, Irene, Bear Stearns, Lehman Brothers. Thanks for playing. Out of business. We are at epic lows. Banks are a terrible investment. Period.
This is why Vinny and I quit.
I quit, but I get it. I quit, but I get it. Exactly. Within the banks here and financials, though, really important. I think the one sector where the non-bank financials.
Let's look at Morgan Stanley first. That looks bad to me.
Yeah, rolling over. And just here, let's have a little fun too. Watch this. So from its peak in the dot-com peak all the way to now, this thing has gone up at an annualized rate of 98 basis points. So 98 basis points a year since the peak in 2000, which means adjusted for inflation, this is a donut. It's a joke. There it is. Right now, but to your point, Morgan Stanley has all the elements of a bullish to bearish reversal. I would be short.
Pull up Jeffries, which reported recently. It feels like that's the leading indicator. Down worse.
Down worse. And all of these sort of boutique things, getting murdered, PIPR, getting murdered. And then you've got, of course, the KKRs. It's all the same thing.
Well, hold on. Before you get to, I was previewing the private equity firm. So let's bring up Blackstone.
Porter, you pissed off Danny.
Porter,
you
bring up Jeffries, you throw it in the middle of the thing. So typical.
I love it.
All right. Give me BX and Apollo.
BX.
Apollo.
Well, again, so this is the first.
This is Blackstone for people out there that, yeah.
Okay. Right. So if one had to sit in front of some panel, I guess when you get a PhD, you go in front of a panel and you give your dissertation, right? And you got to answer questions for an hour and a half or 2 hours. If you had to answer, you pick your own panel, anybody pick their panel. How can one explain intellectually that this operating business went from 140 to 200 back to 240, all in a matter of 7-8 months? Was it cheap at 140? Then it got expensive at 200, then it got free. I mean, the truth is, there is a relationship between the price of the shares, the earnings of shares on a 5, 10, 20-year basis. But this month, this week, 6 months, 9 months, zero relationship. Better to look at charts. I would say it's a sell, rolling over.
All right. And that's the same for KKR?
Yep.
And Apollo is Blackstone? All the same?
Yeah.
Okay.
Danny, you remember when we owned Blackstone at $10?
On the IPO.
Yeah. Or no, after the financial crisis at $10. We couldn't. We pitched to everybody. Everyone's like, I don't want to own it. So I think it went to 20, and we sold it, and then now it's
and everybody owns it. All right, so let's move on just for the sake of time here. I want to do one other. Sorry, KRE we need to look at, which is more of the regionals. Carter, glance at that real quick.
I'll preview it for you, Denny. Sell.
Yep.
Oh yeah, he did kind of already because the rates are going down.
Watch this. Let's do that same ratio chart, but we'll do KRE relative to BKX. We got KRE on the top. And we'll look at its relative performance to the BKX. Here we go. And what we've got is something that's pretty darn depressing. Yeah. I mean, look at this. KRE has gone straight up for the past 2-3 years, and it's going straight down relative to the BKX and relative to the SPX. So that's what alpha is, right? Is relative performance. It is making all-time historic. Sorry, thanks for playing lows.
I love this added thing to your repertoire. Thanks for playing. What's your favorite station? The Hard Rock and Carter Worth FM. Well, I'll tell you that it's really interesting because the credit quality issues, if they do emerge in the U.S. economy, will fall more in the KRE than they will in the XLF. All right, on to energy, Carter. Let's look at oil. Let's look at the XLE, please.
All right, well, so XLE, and obviously two names dominate this. It's
ExxonMobil,
50% in Chevron and Exxon. But this is the definition of relative performance on a data. I think the real story is this. You have something that was obviously the worst single thing during COVID. Not one plane or car was moving. And then it delivered more results than anything after COVID. It bounced the most, having sold off the most. But the sequence that I think is pretty clear is a huge advance, almost a 5-bagger, 20 to 100, and now consolidating for the better part of 3 years. Ultimately, my bias is up that it moves out of the range in which it's been mired.
That's XLE or ExxonMobil? Sorry.
This is XLE.
XLE. So I'm sure ExxonMobil is the exact same. It feels like that's a breakout, not to force you. Yeah.
Yep. XLE, XOM, because it's Yep. I like them both. I would be sort of small longs.
The smaller guys, which is the XOP, has not been as good.
Not as good. No.
What is? Ooh.
More of a pair of twos here. The question is it turning? Another one to maybe consider, and I briefly did note it was Schlumberger. I think it's on the cusp of a bearish.
Danny pronounces it Schlumberger.
That's not me. That was our other partner that pronounced it Schlumberger, you idiot. Just like he did Sherman-Williams. Anyway.
Hamburger.
Yeah, instead of Sherman. Good, nice try.
Can we throw one in?
Well, Petrobras. Don't throw a new one in.
No. Petrobras.
That's on our list. Petrobras, PBR. a Brazilian wonderful energy company that these two have decided to brain damage themselves upon. Ooh, interesting.
So the question is a little bit like the energy. Is this consolidation? Is it in a position to start to move out of this range? I'd be small long, adding on strength only. Weakness would not be an opportunity to add more. It would undermine the premise to be long in the first place.
Carter, question for you. Your charts do not include dividends, correct?
Correct.
Okay, so with this name in particular, it's Porter. This thing's still paying a decent dividend, or did the government make them cancel it?
No, still got it.
Well done, Danny.
Thank you.
Well done.
Okay, very good. All right, let's move to consumer discretionary and some of the staples. Walmart, which has been, I wouldn't say the easiest sell call from 100, but didn't take a lot to get a 40 multiple, 45 PE Walmart.
Right. I traded over one-time sales, selling garden hoses, towels, and bags of sugar. Never traded that high ever. And now here comes the crack. Its brethren Costco equally cracking, and I would say there's more to come. I would not be long Walmart.
Well, and Target, I assume, is one of the worst charts on planet Earth. I have no position in it. I've just
my God.
So whatever they do there, they're not doing it very well.
That looks awful.
All right. Two more names in there, Visa and MasterCard, that fall into that world just in spending. These are critical to me.
Yes, so they've held up remarkably well. So the question is, does one respect that relative strength and retain the longs, or does one consider it, hey, maybe these are the last to go? That's my hunch, is to reduce exposure on the long side to both names.
Well, then let me just interject here. This is where the charts are interesting because they're telling us, not necessarily will be true, that people are pricing in a recession, because if those charts do go to where you think they were, we're clearly in a recession, because to break those charts and then have Walmart and Target continue to go lower means their same store sales are lapping on a negative basis. A couple other names, I won't tell you which way Porter and Vinny are leaning on this, but DG is a kind of a special sit. Curious your thoughts there.
Yeah, so to my seat, I think you can catch this as a trade. What do we know? Day to day, the relative strength is incredible. If you were to sit with a simple screen, find me all stocks, any cap, any size, any business that are up over the past 4 or 5 weeks versus down, you have a very small list of names. This would be in them. 2, you have the prospects of filling the gap. Obviously, there must have been something grotesque that was said on 29th of August. Wasn't just a downgrade by a journalist at Morgan Stanley and Goldman Sachs. Wasn't a Barron's article. It had to be earnings. It had to be bad. Now the question is, can we fill that gap? I would be long here playing for a gap fill.
All right, a couple of names I want to throw in the gaming sector that are more economically sensitive. Wynn and Penn.
Yep, here we go.
WYNN and Penn Gaming, PENN, which I think is really special.
Twos from my seat. I mean, is
both
it something rush out and sell that thing? Why? Got to get long here? Why? It's sort of just meandering pair of twos.
How about Penn?
I think others are worse. There might be others. What others can we look at?
Give me Penn, PENN, which is ESPN bet, which is going to figure itself out at some point.
No, that's worse. I'd rather short that.
I guess, which leads to the next grouping of the online gamblers, which are starting to get hit on Kalshi's invasion into their sector. DKNG, Donkey Kong.
Yeah. Okay, a couple things here that obviously getting into the nuance. It is particularly unhappy and worrisome and negative if you have strength that there's no follow through. So it's like, a bad team that always loses all of a sudden wins and then has no follow through, or a terrible student, DDD, he gets an A. He's like, oh, maybe he's gotten better. He's stopped drinking. He's studying now. And then he goes right back to D's. That's really bad. You draw in a lot of buyers. It's good. And only to sink it. It is bad. I'd get out, sell.
And Flutter, FLUT.
FLUT. Similar bias to the downside, playing for 195.
Genius Sports, GENI. And there's a reason these are all getting hit, but they also have a.
Okay.
Something's different here.
That's right. Something's different. Price volume correlation is bullish. Relative strength is impressive. And you can see from the 100 steady moving average going off the side of the screen that it must have come from much higher prices. Prove that out. There it is. My hunch is to be long.
Genius Sports. Genius. All right.
Andy, that was
That's good. We can hold that position. All right. Lightning round. These are some of Vinny and Porter's specials. I'll let them take you through this. Let's start with SOC, which falls in the energy sector.
SOC. Here we go. Long. Like it. Bullish price volume correlation, good relative strength, responds to the smoothing mechanism well. Long.
Okay. AirCap. AER.
AER. Well, this was a beast. And holding up so well, I would stay long. I would add.
Wow.
Stay long, be long.
I'll let
guys.
Porter give his symbol here. I can't even say it. So the next one I think was some prison stock or something.
GEO.
Here we go. GEO. All right. Well, we get a
Beauty.
massive heavy volume up thrust and gap on 6 November. That happens to be election day, so it must be something that's political. We checked back to the penny, to the 150 day, and bounces well. I would be long, all in the context of something that can move back to and through the former high. I would play for about 38.
Wow. Okay. And then the last one, these guys nailed a long time ago, which was Zinn, which is Philip Morris, which is PM, another Sin stock.
PM,
How are we looking on PM?
they're both good. Look at MO, look at PM. Obviously, these are bond proxies. Probably yields down a bit, but down in here, the yields are probably 6+%. They're probably more like 5, 4.5. But I would stay long. Could you sell calls here? Sell the 165s for May? Sure, April. But either way, long.
I don't see Mike Coe on this program. We don't need an options. I'm just
No,
kidding.
no, no.
I'm joking. I'm kidding. I'm kidding.
I love the fact that. So my question for Carter was, I always get worried when we're well north of the moving averages, like PM is right now. So, and whenever I trim, Porter sometimes yells at me, like, "What are you doing?" Right? Like, and I'm like, "I'm channeling."
What are we doing?
power," right? Like this is well above the moving averages. So, what would you do here, where I have
I would. I mean, I think the idea is, there's that expression, have your cake and eat it too. Can you stay long? And yet, while one might be worried that it backs and fills or backs away, could we sell again, like the 165s for April, to 2.5 weeks to go and take in premium, $1, maybe $3, and lower our cost basis, yet stay long and not have a taxable event? Let's do this. Let's go back and pull
The
this
problem
back.
with this stock is the vol's so low, you're not going to get a sell. You're not going to get a lot.
Right.
Calls.
You write calls. You're not getting a lot of premium for it. I hear you, but
So yeah, if not, I would just stay. And the reason, there's a difference if you go up like this, or if you gap up. It gapped up, which means it belongs here, right? It said something that re-rated the security.
Yeah, put it in its
if
mouth.
I couldn't sell calls, I would just stay. I would not trim.
Okay. All right, well, listen, for the sake of keeping this in under an hour, I've had about 3 bourbons. So I have my orders for tomorrow, obviously, that you've given us here, Carter. It's extremely helpful putting this in context with everything that's going on. I really always felt using it as a mosaic and the stuff that whether we agree with you or not on certain names, I would say we lined up 90 to 95% on this, which I don't know if that's good or bad. I think fundamentally,
I'm trying to think through all the years. It was about 05 when we met, so that's 20 years ago. And I think sometimes we're always more than 50-50. It's sometimes 60-40, sometimes it's 80-20. But if we're at 90-10, either we're going to eat like kings or we're in big trouble.
Porter, I know it wasn't a full what are we doing, but what are we doing with Carter always takes precedence. And Carter, I hope we can do this quarterly with you like we used to do in the old days. This would be fantastic. And we'll have you back on. And Porter and Vinny, I will see you guys in IRL here in a couple days. So
can I add something?
Please.
Carter always provided for us. I'm about 3 bourbons deep. So, but Carter always added for us. We're like 3 fundamental alpha dogs, right? And I know you've walked away from fundamentals and technicals. So whenever we disagreed and just didn't see eye to eye, you were sort of the arbiter who brought us on names where there was fundamental disagreement. And let's see what the technicians say. Let's see what Carter says. And that was very important to us.
Yep.
And so you were so value added to our process in terms of, look, I might think it's bullish, Danny might think it's bearish, or vice versa, or Porter, it doesn't matter. For you, you provided for us, what are the technicals telling us so that we could walk away from our biases and determine what the market's saying, what the charts are saying.
I want to add one more too. If Vinny gets an add on, I'll get an add on too here, Danny. The other thing that the patterns that he has are like the patterns in my head of the bearish to bullish reversal, or the bullish to bearish. That's where we found we made the most money of, like, fundamentals stink. Everyone hates it. And hey, it got a little bit better. And the fundamentals are inflecting, the chart's inflecting, and then you get the bang explosion through that gap. and vice versa on the cut down lower, like a Tesla or something like that, where you can really get your teeth into it, breaking the levels and stuff like that. So
Yeah, no, very satisfying when something changes trend. True. All right, team, you guys are great, and let's do it quarterly.
all right, appreciate it.
Guys, thanks so much.